All right.
Okay,
Okay.
we'll see how it is
Okay.
here. Now, got my point? Now, this
Yeah.
is
Yeah.
this is with respect first 10-15 minutes just listen what happening, okay? This is with respect to what IFRS 15, okay? This is with respect to IFRS 15. What it says is, see, previously it is IAS 18, okay? Previously. Now they have converted to what? They have converted to IFRS 15. Simple thing. What are their things? Very straightforward, very to the point. They have 5 steps are there. Whenever you do the business, whenever you do the sales, what is there? First you will ask request. You will say, now I'm telling you request for quotation. Is it right? You will say request for quotation. Then you will get invoice. Is it right? Then you will perform the work. Okay, you will perform the work. Then the invoice is nothing but the value. Okay, then you perform the work. When you will say that yes, the work is complete. Is it? And once the complete work is complete, there is a settlement. Is that this is the normal process that is happening. The same thing they have converted into IFRS 15 revenue. It is, and whenever you are doing this, any job you are doing, this is every job is a contract. Is that every job is going to be a contract? When we are saving, it's a contract. How we have to treat the revenue? Sometimes you are giving the contract with some additional things. Okay, what will happen? You will give sales as well as you will give service. Is that you will give sales as well as you will give service. If you take only, if you are talking only, you don't want service, you want only product, price will be different. If they say that no, we are giving product, we are service, don't ever think that somebody will give free service. There is no free service at all in the world. Everybody will charge. But what happens? Yes, they will say that you take the product with the service, then will give you some concessions. Any equipment, is it right? Any equipment will be there. Any equipment, okay? You will have equipment and they will have some consumables will be there. Is that you want some medical instruments? Is that medical instruments? What will happen? There will be some consumables will be there. Oil and refinery, there will be some consumables there. There will be some annual maintenance contract, service contracts will be there. Then what will happen? The moment you are saying product, you are saying service. Definitely, if you take the product will be 15,000 reals. If you take the service separately, the service will be 5,000 reals. But if you say that no, I want to take product as well as service, then they will say that okay, we will give it for how much? We will give it for 14,000 reals. That will say that yes, okay, we will take. It is happening everywhere. Cars, you see the car. People say cars free service, free insurance, free warranty, 7 years warranty, this much, that much. So many things they will say. Is it there? Is they are giving you free of cost?
No.
No, they will charge it. Okay, they will
Yeah.
charge. This is the simple summary of this chapter. Okay, we have to segregate. There are going to be 5 steps. Is that this will be checked in the MCQ as well as this will be checked in the section B also. Section A and section B. This is the answer question topic related to section A and section B. What they say, apply the principles of recognition of revenue. What is the identification of contract? There is a performance obligation. Without performance, nobody will pay. Okay? Without delivering the products, nobody will pay. Performance obligation. And definitely every transaction will have some price. Okay? Every transaction will have price. Is it? And most importantly, you have a allocation of the price. You will allocate what is the price for the product and what is the price for the service. Is it? What is the price for the product? And recognition of revenue. When it is satisfied, obligation is satisfied. You are talking about 100%. Okay, they will say first they will give 10% down payment, then 20%, then 50%. Once completed, they will give you 20, remaining 20%. Is it? This is the simple, very simple. Assume very in terms of any product, the how we are doing the sales, the same thing will be reflected in a very orderly manner. Okay, in a very orderly manner. Apply the what is the criteria of recognition of revenue. Okay, what are the acceptable methods? How it is going to be accepted? How it is going to be accepted, and what is the measuring progress for completion? When it is completed, how it is going to be looked into. Explain and apply the criteria of recognition of what is how it has to be done with respect to contract cost as such. When you are doing the things, the recognition of revenue, or specifically for the following types of, you have different things. One something we'll call it principals versus agents. We are talking about any time we are having a repurchase agreement. Is that you are selling in recently what happens long back, not recently, long back, Honda came with an offer that you buy the car for 4 years. After 4 years, if you want to sell it, you sell to car to us and you can buy a new car from us. People will say this. Most of the people, what they say, you recently, Omantel also came with the offer recently. If I remember last week only, you get your own old phone, we will give you a new phone. You have there is one online car app is there. These people, what they will do, they will repurchase. They will sell it and they will repurchase it back. Why people will do this? What is that? Because technology is changing very fast. Technology is changing fast and people want new technology to be used. That is the reason Omantel came with an offer that yes, you get your old phone, but there is a condition. Is it right? You cannot get an old phone and say that yes. They'll say that any phone which is purchased after 2020, those models will be accepted. Beyond that, you will not be. You cannot say that I am having a model of 2015 and you have to accept. No, it will not do that. That is called as a repurchase agreement. Bill and hold arrangement. Bill and hold means you are billing the product but you will hold it. Hold it for delivery. They say that yes, you have to deliver after some time. Then what is the arrangements you have to do? And most importantly, you have the consignments. All these are related to sales. What we are doing, prepare the financial statement extracts for the contracts where performance, how much you have performed, that much you have to realize. Okay, that much you have to realize. Are you clear about this? Means whenever
Yes,
there
sir.
is a sale, how the sale has to be processed and what are the terms and conditions of sales. Every sale is not a sale what we think. There will be some separate clauses will be there in the sale also. Is it right? Now, what they say, they are talking about the 5 steps. This chapter is only concerned about 5 steps. Okay. The first one is, I will say, the first one is contract. Okay. The first one is contract. The second one is obligation. Is it? CO for obligation. The first one is contract. The second one is obligation. The third one is price. Okay. The third one is price. The fourth one is allocation. The fourth one is allocation. The fifth one is recognition. Very important concept with respect to IFRS 15. Is that how this is happening? First you will have a contract, then you will have what I am going to do on that contract, then the contract will have a price, then the contract will have allocation, how it is product, service, everything. and the last is it is recognition. Is that 5 steps of IFRS revenue: contract, obligation, price,
Price.
allocation, and recognition. Is it right? Where there is
Yeah.
easy, I will say easy. Where it is difficult, I will tell you difficult. Okay? What they say, first you have to identify. Wait receives an order from a customer 12 months. Technical support. Wait receives an order from a customer for a computer as for computer as well as customer technical support. Is that you are talking about? See, it naturally happens. I'm taking some take IT projects. I want support also. Is that where delivers the computers and transfers the legal title. Computer you will deliver, you will take the price, but the and to the customer on the same day. The weight paid how much? 420. The customer normally sells 300 is for the computer. Technical support is how much? 120. Technical support is a 300 is for the computer. Technical support is how much? Technical support is 120. This
120.
120 is for how many months? It is for
12 months.
12 months. Means every month how much it will come? Every month it will be how much? 10.
37.5.
Is it? Every month it will be 10. 120 divided by 10, it comes to how much? 10. First, there should be an agreement between two different people. One, between the weight or its customer for provision of goods and services. Without agreement, nothing will work. Okay, without agreement, nothing will work as such. Second one, what is there should be a performance obligation. What is my obligation? I'm supplying the computer as well as I'm supplying the service also. It's simple. Nothing is there. A simple. If you understand a invoice, automatically you understand this entire chapter. Is it? You have a technical, you have a support, and we are giving that assurance. Next, you should have a price for that. That yes, I am providing with this price every time. Okay. Next, what is the allocation? You are allocating. You are allocating 300 for the computer and 120 for the service.
Service.
Is it? Control. Next, now when you are saying that it is an obligation, recognize. When it happens, see, as simple as that. You are going and buying something in a small shop besides our house. Unless until we don't pay money, they will not put that in the plastic bag. Understand point? They will not, unless your amount is not, the receipt will not come, they will not hand over the bag to you. Understand point? That is the simple concept. This much is there. Is that? It's not a big thing which we are going to have. Is that? What? Recognition of revenue as when what will happen? Control. Control is nothing but the title. Ownership. Okay? Control is nothing but the ownership. Pass to the to the customer as 300 should be recognized. Okay? Simple. You are swiping the card, you will get the slip. When you are swiping the card and you have kept the slip, then only it is accepted. Sometimes it happens, you are swiping the card and you will not get it will be rejected. Maybe network problem will be there. It will be rejected. Then it is not a sale. Is it? It is not a sale. This is the simple concept of this. Okay. When you are talking about the things, what identify the contract. In simple, this is not a difficult thing. Is it? There should be agreement between two or more parties. Is it? There are two agreements that somebody is going to pay, somebody is going to receive. Is that what it says? Read again. Okay. If if you are coming like this, it is key points. Okay. Some key points you cannot overlook it. What happened? A contract will be in writing, orally, or through customer business practices. Fine. In sometimes it happens, you just send it, I will take the delivery line. The parties of the contract have approved contract, committed to perform. Is that you have to give commitment. The entity and identify each party rights What is I want to buy, you want to sell. That is the rights. The entity can identify payment terms. What will happen? They'll say that yes, the value is 1,000 reals. They say that you have to pay advance 10%. Then 90% is on settlement. Every contract will have these terms and conditions. Somebody will say that you have to pay in advance total amount. You have to pay if you are buying online. Okay, if you are buying online, they will say that you have to pay by not by debit card, you have to pay by credit card. Okay, why we are saying credit card? Means there should be a bank guarantee. Understand my point? Listen, okay, first time you are understanding this. If you are, they say that debit card is not a guarantee, but credit card is a bank guarantee. If the customer is not paying, bank will pay on behalf of the customer. Subsequently, bank will recover from the customer. That is a different thing. That is the second thing. That is the reason most of the people, most of the companies say use credit card, not a debit card. Is it? There should have commercial substance value should be there. Is it right? It is probably that the entity will collect the consideration in exchange of goods or services. Are you understanding what is happening? There should be a contract, there should be a rights and obligation, there should be a price, there should be a payment terms and condition, there should be some value, and you should perform it. In the end, we should not say that we are not performing. Fine? Are you clear about
Yes.
this? Yes, Sumaya.
Yes, doctor.
Is it okay?
Yes, doctor.
Fine? Listen carefully, okay? Nothing is very simple. Easy scoring marks. We can score minimum 6 marks here. Is that minimum you can score 6 marks? I am very particular about. They will give like what we have done 20 marks question 1 point they will give somewhere. On January 1st, signed a contract customer, supply them with an asset on 31st March. In return of payment 360 on September 3. Control of the asset passed on the customer to see the thing. Dates are important. Is that year end is how much? Year end is 31st March. Is that year end is how much? 31st March 2006. When they have made a contract, they have made a contract on January. Is it right? They signed a contract and it is they supply them an asset when they are going to supply March 31st March. In return of payment, when they are going to make a payment, they are going to make a payment on 30th of September. Is that 30th of September 2006. Control of the asset passed to the customer. Ownership. The control has been passed when the control has passed on 30th. See nowadays what happens? See the thing. You will deliver the product. Is it right? You deliver the product. Most of the time it will be credit sales. Is that most of the time it will be credit sales. The payment period will be the payment credit sales payment will be 90 days. Ownership will be given today, but payment you are making after 90 days. Is that payment is going to pay after 90 days. You are going to take another example. You are giving a check. Check is a guaranteed payment. Check nowadays should not get bounced. Is it? It is a criminal offense, financial offense. When you are talking about the check is bounced, you have when you are giving the check means you are committed to pay. Is that when you are committed? These are the things. When you are doing the business, you have to be very specific. Is it? Control of that. By March 31st, as a result of changes of economic climate, is that Mano did not believe that it will probably pay 360,000. See, you have agreed on when you have agreed on 1st January. But when the control is going to be handled on 31st of March, the customer will say that no, I cannot be in a position to pay. I cannot in a position to pay. Then when you are not in a position to pay, then it will not be a sale. It will not be a sale. Is it? Means the most important thing, now you understand, as simple as that. I told you the very simple thing. You are going and buying something on at any small retail shop, smallest of the smallest retail shop. Even you are going to have a coffee, is that you are putting a card. When you put the card, if it is accepted, it is a sale. If it is not accepted, it is not a sale. Very simple. Is it right? This is the first step. If there is no payment. Identify separate obligations. Okay. What are the separate obligation? I told you, computer and services. You are providing goods as well as you are providing services. Okay, you are providing goods and some contracts contain more than one performance obligation. One entity said that we are ceased to sell a car, which includes 1 year free servicing and maintenance. I told you in the beginning, is that we are not only you are selling a product, is it right? You are selling a product as well as you will sell a service. Is that you are selling the product as well? Two things are there. One entity might enter into a contract with the customer to provide 5 lectures as well as provide the textbook. Is that you are talking about two things coming under the same at one price. Definitely the person who is going to do, they will calculate. It is not like without calculation. What we have to do, what is the distinct specific performance within the contract must be identified. How much is the product and how much is the service? Is it how much is the product and how much is the service? This is what the concept says. Performance or may not be limited to goods or services. An entity, customer, business practices, publish policies, specific statements, create expectation that they will transfer goods or services to the customer. When somebody is selling, they give the reasons why we are doing this. And people will get trapped. Okay, everything everywhere happen. I will say this to you also. Before you started this chapter, you will have a different understanding about the revenue sales. Once you complete this chapter, you will have a complete different understanding. Is that you are giving your entity must decide obligation. Is that must decide obligation that you are going to provide goods or services. You are going to arrange another party. If you are not doing, you are assigning some other party to provide goods or services. Is that in most of the cases what happens nowadays? We are talking in terms of what? Outsourcing. Yeah, we are talking about outsourcing. In that case, definitely, I am taking the contract. Most of the times, what will happen? You will have subcontracts. You will take main contract, then you will divide. You will outsource the activities to a subcontract as such. Okay, you will outsource the things to the subcontract as such. If the entity is an agent, then revenue is recognized based on the fee or commission it is entitled. If a company is an agent, broker, then what will happen? You have to know. It's right. You assume a person is a broker. He is selling a product of 10,000 reals. In 10,000 reals, he is selling the product. In 10,000 reals, 9,500 is the cost of the product and 500 is the service charges, brokerage fees. Is it? They are talking about the commission you get it. Then for the entity which is providing service, the entity is providing service. 10,000 is not the sale, okay? 10,000 is not the sale. For the entity which provide the service, 500 is only the sales. I will tell you in a different way. Is it right? Now people are there. People are there who are most of the time brokers are there. People are there here. You tell them they will get products from China. Is that they will get the product in China and they will supply to you. They are getting the product of China, 9,500 they will get. That is the cost. They have to pay for them, okay? That is not their revenue. Their revenue is only how much? Their revenue is only the fees. How much is the 500? So don't assume and presume that yes, I'm doing a business of a commission, the brokerage, and I treat 10,000 as revenue. No, that is not the revenue. Only the amount which is you are going to get for yourself is the revenue for you. Is it clear to you?
Yes, doctor.
Fine. Simple things. Nothing is difficult. Revenue, see, Hardens revenue includes 45,000. For goods it's sold, acting as an agent. Commission is how much? 10%. And remitted the difference for to the cost of sales. Is it they have taken 45,000, is it right? 45,000 is the sales and 4,500, 10% is the commission. How should the agency should be treated in the financial statement? What they will say? They say that they will not. What they will do? Hardens should not have included 45,000. 40 is a 45. You should not include 45 as a revenue because it's acting as an agent, not a principal. You are only agent. You are not the supplier of the goods. Only the commission can be recorded as revenue. Whereas 40,500 it's a liability. You have to pay for the goods which you are purchasing. Is it for the goods which you are purchasing? What will happen? Is it what will do? People will say that yes, revenue is 40,000. No, is that first what we'll do? You will say it is revenue is going to be how much? 45,000. Cash is going to be how much? Debit is the cash. Cash is 45,000. Revenue is 45,000. But subsequently, you are cancelling the things. Okay, see the thing. You put it in a T account. Okay, first you will put it on the credit side. Is there any time any doubt is there? You put like this. Okay, 45,000. What is the cost? Cost is going to be 40,500. That cost is going to be 40,000. The difference of what? The difference of 4,000 is your revenue. Is it? This is the cost. That's what it says. You have to divide it. Is that simple? I'm doing import-export business. And somebody said that you have to get. Not so many people are doing it. So many people. A4 size paper. You want? I will get the paper from outside. I will supply it. Is it? There will be a cost. There will be a commission. The commission will be treated as a revenue. Cost will be paid back. Okay. This is the second step. Okay. This is the second step. The third step, what is there? Very simple, there should be a price. Is it? There should be a price. Now, the amount of consideration to which entity expects in exchange of promised goods. Now, there are a lot of links are there, okay? Amount collected on behalf of third parties such as sales tax. Now, you see the things. You will have the sales 100. You will have the VAT 5%. You are collecting VAT on behalf of the government and you have to repay this VAT to the government. It is a financial crime. That is the reason they pay huge penalty whenever they delay or they will not pay tax. When you are, you are going to collect how much from your customer? 105. But this in 105, 100 per reals is your sales and 5 reals is your VAT. VAT is you how much you have to treat sales? You have to treat sales as 100 reals only. Is it? You have the consideration promised in the contract with the customer may include fixed amounts, variable amounts, or both. It will vary. You see the thing. You are talking about you want to buy 100 units. They say that 100 units at the rate of 10, you are going to pay 1,000. Now, you want to say that you want to buy 1,500 units. They say that 1,500 units Okay, I will pay 9. I will give offer what 9. Is it? But discount is there. Is it right? Discount is there. What they will do? They will say that sales is going to be 15,000 minus. They will write discount. Discount is 1,500. The total value is going to be 13,500. The total value is 13,500. That is the thing. What happens is that when determining the price, entity should consider what is the variable consideration, change in the units, existence of any significant financing component in the contract. Is it? You are talking. Sometimes what will happen? They will say that you have to pay in dollars. Is it? There you have to pay in dollars. Your terms and conditions will change. Is it right? Financing component. Sometimes what will happen? Non-cash transaction consideration. People will say, now you see the things. Is that non-cash consideration? You are buying something. Is it right? They will give you some gift. Is that they are buying something? They will give gift. It comes free of cost? No. I will tell you this, even if you are talking about the things, some companies give samples. Samples is also not free of cost. Consideration payable to the customer. Is that what is the amount we are going to pay to the customer? That is also is important. Is that fine? This is what it said. When you are determining the price, you have to see variable consideration. Is there any financing component? Any non-cash transactions are there? Any gifts are there? Or any consideration we are going to pay? Sometime we will reward the customers. Is it right? You see the things in Ramadan, what they say, people will say there is a raffle draw. Is it right? There is a raffle draw. They say that yes, you are going to get this much. Okay? You will get these prizes. Our prizes are free, or they are going to pay from their pocket? Is it right? Are anything free? No. Whatever the profits they earn from the sales only, they will make these considerations. Okay? They will not compromise on profits. Nobody. Tomorrow you are going to be in place, I am in the place. Everyone will do the same thing. Is that variable consideration? The amount on consideration received within the contract can vary because of because of rebates, because of incentives, because of bonuses. Is that because of what I gave example? You are buying 100 units, 10, but you are talking about incentive. It is an incentive. 1500 units. You will say that you will ask very, very energetically. Okay. You will ask, and I will ask energetically, yes, how much I will get discount, how much I will discount. They will say that okay, you will get 1 real discount. I will be very happy that yes, I am getting 1 real discount. But actually, what's happening? Instead of buying 1,000 units, I am buying 1,500 units. Is it? People will calculate all these things with respect to variable consideration. If the consideration promised in the contract includes sometimes a bonus, discounts, all those things, the entity will measure the consideration it is entitled. They will measure, they will estimate. Is it? They will estimate. They will not say that it is going to be free. Okay? That's what it says. The method of estimation depends on customers. Okay? Depends on customers, how the customers will negotiate. People say that, yeah, you are negotiating. Oh, you are. They very simple. They say that yeah, you are negotiating. You are bakhil. No, it is not like that. We are not thinking that we are bakhil. Everybody have the value for money. Is it? You have value for money. For that you will benefit. You know the value of 1 real. You know the value of 10 reals. Is it? You know the value, then only you will negotiate. If they don't have the value, you will not negotiate. And value will not come free of cost. Is it? The second part, what you are doing, determining the price. Entity must timing, okay, payment with respect to financial benefit. See what will happen. You see the thing. Immediately you are buying something, you say what is the cash price. Immediately you are saying that yes, I am buying a phone, the phone is 595. Take an example, okay, 595. Immediately you say cash price. I am paying cash, not by debit card, cash. Now debit card is also the same thing, but I'll say cash price. Immediately you want to get attracted. If you are paying on credit, nobody will give discounts. But if you pay cash, I say that I pay cash, 100% cash now. Assume you are dealing with a contract of 1 million reals. And when you are dealing with a 1 million reals and you are going to say that I will give 1 million reals in cash, then automatically you see the response from the other party. The other party says that, okay, if I see cash is cash, as simple as that, okay? They say that, okay, I will, then he will readily agree, he will give discount. If you say that, yeah, 1 million real, I will give you in installments. I will give in 4 installments of 25, 250,000, 250,000, spread over 1 year. People are reluctant. Is it? The same thing we are doing. We are not doing anything else. The same thing what we are practicing in real life, the same thing is reflected here. Yeah, the different what they say they are talking about the what we do. People will calculate what is the present value. What is value? See, you are getting 250, 250, 250 for 1 year. Now you are getting exactly how much you are getting 1 million at one time. Which one you will prefer?
1 million one time.
1 million one time. Now you are getting. As simple as that. Immediately we are getting. Is it right? Immediately we are getting. We will not wait. Is it right? Is it not? We will not wait for anything else.
Yeah.
Is it right? This is where we have to be little bit understand. It's a smart, intelligent chapter. We don't need to work hard. Okay, we have to in this chapter you have to work smart. As simple as easy marks, don't lose it. Now they say that now there is a question. Kima enters into a contract customer to supply furniture. Control of the furniture. When they have entered, dates are important. 30th September 2003. Sumaya, any doubts is there? You ask me. Okay, I'm here to make you succeed. That's very important for me. Is that for me now? It is more challenging. If Hussein is not coming, I'm very much worried about Hussein. Understand very clearly. I'm telling it from my heart. Okay, I'm telling it from my heart. I'm very much concerned about the people who are not attending. Okay. Now coming back to this, when we say it is the they are is it on 30th September. How much is the what is the price? The price is 750,000. Okay, the price is there. When the payment is there, the payment is there on 30th September 30th September 2005. Market interest rate is increasing. Is it right? What is the rate of interest? Rate of interest is 7%. What they are asking, what is the transaction should be accounted? I am doing it in a very short form. Okay, what the transaction should be accounted? How many years we have, what they say here they have mentioned. You have to calculate present value. Is it? You have to calculate present value. What is the? It is after 2 years. Is it right? It is after 2 years. What is the present value? Present value is C divided by 1 plus R to the power of T. Okay, C divided by 1 plus R. How much is C? C is 750. R is how much? 7%.
7%.
T is how much? 2 years. Work on that. 750 divided by 1.07 to the power of 2. It comes to how much?
One second. Okay. Mm.
How much it will come?
One, 407. It's not correct with me.
750
150. Yeah, divide by 107 into 2, right?
to the power of 2.
I don't have that option in my calculator.
It comes to how much? Sumaya, you have that? 655,079.
Mm.
What they are asking what is the value of 30th September and 2003 and 2004. Okay, 2003 and 2004. Okay, now when you are talking about 2003 and 30th September 2003, okay, 30th September 2003, what is the value? We are going to say that the value is going to be how much? 65,079. Okay, now 30th September, okay, 30th September beginning value, okay, September 2003, or you can put 1st October 2003. They say very clearly, if there is a significant component, then it has been given here in the top left side. There is a consideration receivable needs to be discounted to the present value using the rate at which customer able to borrow. Okay, now what is the value you are going to have? You are going to have 655079. Is it? You have the value of 655079. You remember what we have done in the 2 plus 3 minus 4. Okay, you remember that automatically you will get everything into consideration. Okay, everything you will get into consideration. How much is there? 655. Now they are asking what they are asking on 30th of September 2004. You will what you will do? You will add interest. Understand? You will add interest at the rate of how much? 7%. How much you will get interest at the rate of 7%? Tell me.
45855.
45855.
855.
Is it 45855? Total it comes to how much? 413191107. Is it right? No, this is 700. Okay. Now 70934. I'm just writing. Don't do anything. Okay. Plus 70934. Is it? This is the value. Now, for your understanding, we don't need this. This is the value for 30th September. Is it right? This is the value for 30th September 2004 and 30th September 2003 and 2004.
Yeah.
Is it? This is the value. Means interest will be counted. Nobody will say if your bank is giving the loan, bank will calculate the interest. The same process they will do. The same process they will do. This is where any financing component is there. You have to convert it into present values. For your consideration, just to make sure, 934 into 7%. Is it 934, 700, 934 times 7%. For your understanding only, to make things very easy for you, 49,066. Is it at 066? 000,057. That's all. Is it? This is if you take the things, this is what they are, but contract price.
So this will be until end of September 2005.
Yes.
Yeah. If they requested till 4, then we no need to do this
Yes.
further calculation.
Yes.
Right. Okay.
Why I did, I just want to show that you should get convinced.
Yes.
Okay, this is not required. Just I want to show that. You will ask, is that yes? Why? What is the difference? Then subsequently, fine. This is what the financing aspect. If the consideration is paid to the customer in exchange of distinct goods or service, there is any exchange of goods, purchase concession should be accounted in same way as other purchases. I told you in the beginning, exchange is there. Is it? You get the old product, we'll give the new product. Okay, then definitely the people will calculate. Okay, people will calculate. Fine. Assuming consideration paid to customer is not in exchange of distinct goods, entity should account for its reduction of the transaction price. You are giving a old car and you are buying a new, exchange in the new car. Honda gave, and Honda and other car dealers also they did same thing. They said that, see, people are there who said that I want to replace my car every 2 years, every 4 years. Is it? When you say want to change, there will be a contract at the beginning. Yes, after 4 years, you come back to us, we will value it, we will give you a new car. Okay, this is what Gate enters into contract major chain of retail stores. Customer paid to buy at least 20 million of products over next 12 months. Okay, 20 million. Okay, 20. They want to buy next 12 months. The terms of the contract require to make payment of how much? 1 million to compensate for customer for changes that it will take to place in the retail stores. The terms of the contract require Golden Gate Company to make a payment of 1 million to compensate the customer for changes that it will need to make to its retail stores to accommodate the prices. Any changes is there in the presentation of the retail stores? There is a promise that 1 million. 31st December, this happens when they have not given the beginning date. Is it 31st December? What happens? Is it 2001? They transfer products and services. Value how much? They have transferred products and services worth of how much? 4 million. Is it worth of only 4 million they have transferred? Is it right? Now, they have transferred 4 million of products, means they have to calculate for 4 million only. The value is 20 million. But how much they have committed, they have performance is there. The performance only for 4 million. The payment to the customer is not in exchange of service. Therefore, 1 million to the paid to the customer. Is that we are saying that yes, if there is any issues are there, we will compensate the customer. Is that we will compensate the customer. Now what happens? If any fault is there, is it right? Any fault is there, what will happen? They will give a replacement. Is it? Now you have a consumer protection authority in Oman is there. Okay. If you have purchased any product, they are defective products, automatically you can claim it. Okay, you can claim it legally. Okay, you can claim it legally. Is it? This is what it says. The transaction is valued at how much? The transaction is reduced by 5% because 1 million you have to pay. Is that 1 million you have to pay in case any issues are there? Is it right? Automatically it will reduce by 1 million of 20% is how much? It will be how much? It will be 5,000. Is that 1 million of 20%? 1 million of 20% is 5%. Means the price of the contract will be 95% and the claim, is it right? Claim assurance. Is that claim assurance is how much? The claim assurance is 5%. Getting my point? Means if any attachments are there, then you have to be specifically exclude those attachments. Okay? Exclude those attachments. You should not take, you have to take only the selling price. I will give you another example as simple as that. Is it right? As simple as that. Very simple. You will be surprised to know. You are buying a water bottle, okay, 500 ml water bottle, okay. When you are buying 500 ml water bottle, how much you are going to pay? You will pay 100 paisa. Okay. Now you are buying a 500 water bottle. You are buying a water bottle, all the crates, is it right? You are buying 36 bottles, okay. How much it will charge? Even it will not charge. They will give reduction, okay. They will give good reduction. Is that it will charge you how much? It will charge you only 30 paisa. Delivery is there. People will say that yes, we will deliver. Delivery free of cost? No. Delivery, they say it's a free delivery, but in actual terms it not be a free delivery. Is that this is all we are talking in terms of sales. Okay. Now allocate the transaction price. Allocate the things. The transaction should be allocated for each performance obligation. Is that what is the best standalone selling price? If you're selling only the product, price will be different. If you're selling product and service, price will be different. Okay. If it is observed a price of a goods or service when the entities sell the goods and service separately or in similar circumstances to similar customers. I will tell you this, nowadays people are very clear. I will give real examples. You are having a smartphone, you are taking an iPhone. Is that previously we are so lucky that iPhone will come with charger, everything. Is that iPhone will come with a charger, with stickers, with some headphones, everything. Now they say very clearly, no, iPhone is separate, charger is separate. Even the charger, see the things, the socket is separate and the cable is separate. Get what? The socket is separate, the cable is separate. You have that automatic charger, that is separate. People are segregating everything. People are, and you are saying warranty, okay? People are taking, they'll say that it is 1 year warranty. Now people are saying that you are having an extended warranty. If you want to have an extended warranty, you have to pay more. You have to pay more. We are pricing the products. We are pricing the products. Fine. Now, again, keep you. It is a very simple, very real, practical life chapter. It is discounts. You now don't say that it is a discounts. I told you, bundle sale. If you are buying a water bottle, it will be how much? It will be 100 paisa. Simple. I am telling you, very simple example. You buy the water bottle. Is that people are there? They will buy water bottle in bulk. How much you will get? Here you are getting 24 bottles. The same you will get nowadays. The same you will get in 1 real. Is it right? The same you will get in divide 1 real by 24. How much you will get? 1 bottle will be only 41 paisa. This is way. Any discount should generally be allocated across each component of transaction. A discount should only be allocated specific component transaction if the component is regularly sold separately at discount. Is it? Means now you can understand how we will price the things. Okay. Tomorrow also you start doing business. You will come across all these techniques which we are going to follow. Are you clear about this?
Yes, doctor.
Is it right? Now, see, yes, Sumaya. Shinji companies sell machine and 1 year technical support. How much they are selling it for? How much? 50,000. They are
50.
selling the machine. They are selling the support also. If you are buying the machine with support, it is 50,000. It's usually sell the machine. So if you want to buy machine alone, 60,000. Is it right? But does not sell technical support for this machine, standalone product. Other services can be attract a markup of 50%. If you want services, they will add how much? 50%. It is expected that technical support will cost, if you take technical support, it costs how much? It costs
10,000.
It costs how much? 10,000.
10,000.
Fine. Now, if you take technical support separately, is it right? Other support services with a market. 10,000 is the cost. 50% is the markup. Is that 50% is the markup? Means 5,000. Means if you are selling something separately, how much you will sell? You will sell by how much? 15,000. Is it right? If you are only selling the service. If you are only selling the service, how much you will sell? You will sell it for 15,000. If you are selling only the product, how much you will sell? It will be how much? 60,000. Is it? If you say, now, if you say standalone, you are selling separately. Is it? You are selling standalone. Is it? Product and service. Is it? What is the actual price? Product, if you are selling product and service. Is that product will be 60,000, service will be 15,000, 75,000. Is it 75,000? See the margin. If you are selling both products and service, 50,000. If you are selling product separate, service separate, how much you are getting? 75,000. Is it? How much you are getting? 75,000. Means how much discount you are getting? If you are getting, see how much the transaction based price is allocated, service, how much discount you will get? Can you tell me?
You are selling all together?
Yes.
Like 25?
25. 25 is it? Total price is how much? 75,000.
75.
It comes to how much? Almost. You are getting how much? 33% discount.
33%. Yes.
Is it 33? This is what IFRS says. Now you see the things. We are not learning something new. We are just revising it.
Yeah.
Is it? We are revising. Fine. Now the last one, step 5. Step 5. What is a recognition? Is satisfy the performance by transferring a promised goods. You have to transfer the title. That's very important. Is it? Each performance obligation is identified. The must determine a contract since the beginning till satisfaction. Or is it? You have to start satisfaction means, see if very basically, if I am satisfied, I will buy. If I am satisfied, I will pay. If I am not satisfying, I will not pay. As simple as that. Then only it is going to be identified as a recognition. Is it? Again, in this process, COPAR. Contract, obligation, price, allocation and recognition. Is that if performance is satisfied, then entity must determine the point in time at which customer obtains control. Control is nothing but ownership. Is it? Control is nothing but ownership. Now, control is, and that's what it says, ability to direct use. You have the control, you can do, you have the ownership, you can do anything. Okay. The following are the indicators. What are the indicators of control? Entity has right to payment for the asset. I am paying. Is it right? If I pay, I will get the ownership. Customer has the legal title. Entity has transferred physically. Is it? You are transferring the asset physically. Customer has a significant, means once you have purchased the asset, it is your risk. How you are going to handle it. And customer has accepted the asset. These 5 points, remember, it will be in MCQ. It will be in the concept. Next. Are you clear about this?
Yes, doctor.
Yes, Sumaya. Okay.
Yes, sir.
Fine. Now, consignment inventory. This can be, when you are talking about, see, people say that consignment is coming. I ordered, consignment is on the way. Consignment is at the port. This can raise the issue of consignment when one party legally owns the inventory, but another party keeps the inventory on its premises. The key issue is which party has the majority indicators. See, I have paid amount, but it is still with you. The amount, the inventory is still with you. I have paid it. Okay, I have paid the amount, but I have not delivered it amount. Is that what will happen? Who is going to take the risk? Is that's very important. That is the reason when you are talking in terms of whenever you are purchasing, they say that CIF. What does it mean, CIF? Cost, insurance and freight. Is that whenever you buy anything, they say that the price includes 3 things: cost, insurance and freight. Is it? Cost, insurance and freight. Okay. Now, they gave a small illustration. Okay. They gave a small illustration about, just read it. Okay. Just read for you. Ford Motor is entered into an agreement to provide Dusty, a car retailer, with cars for resale. The terms of agreement: Dust pays cost for insurance and maintenance. Dusty can display the cars in the showroom, use them as demonstration. When a car is sold to customer, Dust pay for the amount. When his car is not sold, they are not obliged to pay. All car remaining unsold for 90 days must be purchased by Dusty at the factory. If cars is not sold, is that now I will not name the companies here. Is that people will sell new cars? Is it people will sell new cars? If cars is not sold, they have their own rent-a-car business. Is that they have their own tourism business? Is it right? If cars is the cars which has been not sold, what will pay? They will pay. They buy the car at the low price, and they will use for rent-a-car and for any for the business purpose. Okay, the same car they will give it for their staff, okay, for their staff as such. Fine. This is where it says. Fine. Now, Ford can require Dusty to return the cars anytime within 90 days. If it is not happen 90 days, then you can purchase. In practice, the right has never been exercised. Is that the 90 days? If within 90 days, if I want it back, I can take it back. But after 90 days, I have to purchase it. Isn't it? I have to purchase it. I mean, there is a condition is attached to it. Dusty can return unsold cars at any time the same rule applies for both the parties. Both the parties without penalty. This has never happened, isn't it? What they say, there is agreement is still in force, and Dusty holds several cars which are delivered less than 90 days earlier. The agreement is still in force, holds several cars which has been delivered within 90 days. How should these cars treated in the financial statements? Read again this. Why I am saying read again this? It is part of our conceptual understanding. Okay, section A, section B, they will touch these points. The key issue is whether Dusty has purchased the cars or not. Is that it is whether or it is a loan. There is a gap. They are not transferring the ownership. Is that they are not unless until ownership is not transferred, you are not have the control. In order to decide Dusty has purchased the cars, we need to determine control. Ownership has to pass. Is that? In other words, Dusty is receiving the benefits. Is it right? And is exposed to the risk inherent to those benefits. Some damage is happening, then it is the responsibility of the Dusty. Now you see in Oman, you will have so many companies will deal with the cars. Something happens, then it is responsibility of the. Of course, they will have insurance. That's the second case. We are not talking about that. But whose the responsibility? They have delivered the car. It is the responsibility of the local dealer. This is what the concept it says. Ford Motors can demand return of cars, without paying penalty. They can demand, and Dusty can also return the cars. Dusty incurs cost of insurance and maintenance. Very important, insurance. See, everywhere you will take the insurance. Who will pay the insurance? Okay. The purchase price of the principal date was delivered at the time of payment delivery. The sale actually takes place at a different date. Is that the sales means what happens? The ultimate point is, if you are buying any product, is it right? If you are buying any product, the most important thing is the ownership. Is it the ownership control? If control is transferred, risk will be transferred. If control is not transferred, the risk will be not transferred. When the control will be transferred? When there is a transfer in price. What is the conclusion? I am going directly to the conclusion. Okay, the cars are assets of Dusty and should be included in the statement of financial position. Therefore, Ford will recognize revenue when cars are dispatched to Dusty. Cars are the assets of Dusty. They have the obligation. They have the obligation to return. They have the obligation to purchase after 90 days. Okay, after 90 days you have the obligation to purchase. Means definitely by default what will happen? In the same case, all the local car dealers in Oman follow more or less same practice. Are you clear about this?
Yeah, Doctor.
Repurchase obligation. Okay, repurchase. You have the obligation that after, I don't want to take that much time. You have the obligation to repurchase. If there is an obligation to repurchase, this is not recognized as a sale. Understand point? It is not, but either as it will recognize as a lease or it is recognized as a secured loan. Is it right? It is not repurchase condition is there. There is obligation to repurchase, right to repurchase. Okay, right, obligation to repurchase at customer request. Obligation to repurchase. If they say very clearly, if there is anything repurchase agreements, then this is not recognized as a sale. Is that we will cover this in the next lecture about lease. Okay, how the lease is there. If the repurchase price is less, we will cover this, not right now. Okay, just hold it for a while. is it hold it for a while. Okay, will whatever is there we carry forward in the next. If the customer is not likely to exercise his right, the entity accounts for the contract as if the sale of a product with right to return. See, you have the right, is it right? If you are giving me the right and I'm not going to exercise it, if it's not going to exercise it, then definitely what will happen? If you are giving me the right and I'm not going to pay, I have to return it back. Is it right? I have to return it back. That's very important. If I'm not fulfilling my obligation, then I have to return it back the product as such. Okay, now you can understand what is there. The entire process is a price factor. The entire process is with respect to transfer of ownerships. They gave you a small example again. Okay, Andren sells maturing inventory. How much? 1 million. To Alba for fair value of how much? 1.5 million. This is happening on 1st January 2001. Handler has the option to repurchase inventory. Is it right? They have the option to repurchase inventory at 2.2. Is it? And Argilin will continue to hold inventory warehouse normally throughout the year. So it is the responsible for maintenance and insurance. Warehouses. Is that here you have the concept of warehouses. Okay. At 31st December. Is it right? 31st December 2008. Okay. The inventory is expected to have what is the fair value? Fair value of how much? 4 million. What are the give reasons? How to record the transaction? And Andren has the right to repurchase. If there is a right to repurchase, there is no sale value. The repurchase value is greater than original price. Repurchase value is how much here? The repurchase value is 2.2. The original selling price is how much? Original selling price is
1.5.
1.5. Is it? Then it is not a sale, is it right? It is not going to be treated as sale, is it? We have what they say, Andren should not recognize as inventory, but should continue it is an asset. This transaction is a loan agreement. Is it? They have said, they have mentioned somewhere, is it right? They have mentioned somewhere. Fair value is how much? Fair value is 4 million. Is it? Fair value is 4 million. Fine. They have, see what they say. They are giving it for 1.5 million and they are taking it back for 2.2 million. The difference of 0.7 million is going to be identified as a effective interest. Fine. This is where if there are some conditions are there, and in the condition there is a repurchase is there. If that is the case, then it is not going to be part of the sale process as per IFRS 15. Okay. Build and hold arrangements. What we'll do? First is a contract on which entity bills a customer for a product, but entity retains physical possession of the product until it is transferred to the customer. You see the things. I will give the online. They say that you have to pay. Is that when they have to pay, they say that it will deliver in 3 working days. You have billed it, you have paid it, but it will be delivered in 3 working days, 7 working days. If you take major equipment, they will say that we are going to deliver in 30 days. Is that they are going to deliver in 30 days as such. If that is the case, what we have to, how we have to address this issue? There may be a fee for custodial services. They will hold it. You will request that deliver after 30 days. Is that you will request deliver after 30 days, deliver after this time. Okay, deliver after this time. They will ask. See, sometimes there is a free, sometimes there is a fee. Okay, there are both are same. Okay, okay. Sometimes they will have free delivery. Sometimes they will charge some fees. Is that customer must have requested. Okay, your customer will request. Product must be identified belonging to the customer. Sometimes what will happen? There will be some manufacturing process will take place. Product must be ready for physical transfer. Is that you are ordering? It will take some time to deliver. Okay, entity cannot have the ability to use the product or sell it to someone else. Is that we don't have the ability, we are not ready to sell. Is that some people what they will do? They will say that there is a old saying is that, is it that people are there now, some people will say that chicken come first or egg is come first. Okay, they will say that when customers will come then only we will order. A customer is not like that. Business cannot be done on that basis that customers will come and then will. You should have some investment also. Is that people, you have to take some risk, as simple as that. Is it that? For that you have to be well prepared on that. This is called as bill and hold arrangements. Common features of transactions. The legal title of the asset may be separated from principal and risk associated with the asset. You are separating legal titles. It is not what happens when the moment you pay. Sometimes what will happen? Non-refundable. Once you have paid, the amount will not be. They will only deliver the product. As simple as that. Is that a transaction linked with other transactions means commercial effect of individual cannot be understood without understanding all the transactions. It's not only one transaction. Is that you are buying products. Is that I told you in the beginning? Medical. You are buying your products. You are buying the consumables, and you cannot imagine. Is it right? This is a business. You will be surprised to know people will take back the waste also. Is it bad car batteries? Is it car batteries? You think that car batteries which are which are expired, they will resell it. Is that tires are there? Is that they will resell it? Is that these are the things people will do the business. You cannot imagine everything, anything. They will have the price on that. Now, if you talk about the things people are doing business only for scrap. Only for scrap, and they are earning a good amount of money. Is it? This is the what it says. Is it? Options may be included in transactions where terms of the option may be highly likely that the option will be exercised. You will build in such an option that it will be done. Okay? It will be done. It will be exercised. Take an example here. Read once. Read A separately, B separately. What it says, point number one, 1st April 2006. Is it right? Johan sold its factory. They have Johan sold its factory to Crave. Okay? Crave. A finance company. It's a finance company. Okay? Automatically you will get the answer before I complete. For how much? For 800,000. Johan continued, they have continued to use the factory, responsible for insurance. Is it responsible for insurance, responsible for maintenance?
Yeah.
Is it? Johan has the right to repurchase. It is not a sale. Is it right? They have the right to repurchase. When it is right to repurchase, it is not a sale. It is a financing agreement. That's all. Nothing is there. Is it right? Johan has to right to repay the factory 980,000. They are selling it for 980, selling it for 800, and they purchase for 980. Is it on April 1st, representing 7% growth each year. On April 1st, 2006, the factory is for having a fair value of how much? The factory is having a fair value of 1.5. And the carrying amount is how much? 600. Is that carrying amount is 600 and the fair value is 1.5, means almost it is 900. The value has been increased. What they are asking, what is the financial reporting treatment? Is that what is the financial reporting treatment for the issues? Is it what is the financial treatment input? I'm putting in points. Okay, I am putting in points. Fine. What they say, they have the right to repurchase. Is it right? Johan has the right to repurchase. Now, what is the repurchase price?
980.
How much is the repurchase price? Is 980. Is it right? Repurchase price is where is that? Repurchase price is 9. It is 980. It is right. It is greater than what? What is the selling price? It is greater than
800.
the selling price. Is that they are taking it? What they are taking it? There will be a 7% growth in value. Rate of interest is how much? Rate of interest is 7%.
7%.
Is it? Is it? The rate of if you take this into consideration, it is going to be called as a financial agreement. Fine? Is it right? It is good. They will ask you this much only. Is that they will ask you how it is a financial agreement. Second one, you tell me, Sumayya. 31st March 2007, okay? Johan sells an oven spare parts. Is that they are selling? Johan is selling what? Johan selling to whom? Marco. Okay? 2,000. How much value is 200,000 for the oven, and 200,000 for the oven, and spare is how much? Spare is 20,000. Johan delivered it when they have delivered in 2007, but were asked to hold the spare parts because Marco factory was very close to Johan warehouse. Expect to hold the spare parts for 2,000. They have paid it, okay, but they said that you hold. Is that whenever we need, we will take the spare parts, okay? Whenever we need, we will take the spare parts. Is that way? The party also kept separately to the warehouse cannot be used or sold by Johan. Means the parts are kept separately. Warehouse, they cannot be used or sold by Johan and ready for immediate delivery. Is it right? Whenever they request, it's a day. Johan agreed to the transaction as it is decided for holding cost. They will charge holding cost. Maybe it is not that much insignificant, that is the thing. Now, it is a sale or it is not a sale?
It's a sale.
Is it? Because they have hold it for 20,000 spares. They, whenever they ask, they have the right to take it, and they are paying for the storage and maintenance cost. They are paying for storage and maintenance cost, and they say they agreed that the transaction is decided holding the cost. Maybe it is insignificant, then irrespective of that they will pay. Is it right? Based on, okay, based on this, it is going to be identified as a sale. What you have to be clear is why it is called as a financial agreement and why it is going to be called as a sale. Is it clear to you all?
Yes, doctor.
An entity transfer control of goods and services or therefore satisfy performance obligation. Is it? Control is nothing but the ownership. If one of the following criteria, a customer simultaneously receives and consumes the benefits. That is what when you are satisfying the customer, you are receiving, acknowledging, and you are using food items, as simple as that. Entity performance create, enhance an asset. For example, work that the customer controls as the asset is created. Is that your entity creates or enhance an asset? You are converting, you are improving the asset stages. Is that work in progress? The entity performance does not create an asset with an alternative use to the entity, and the entity has enforceable right to payment for performance completed. Is it? When we are talking about the obligation over time, means you have the right to pay once the other person can demand payment from you. Okay, once you listen carefully, you are going to say that I have received and you will sign it. Is it? Then you are obliged to pay. We cannot escape from that. Is it? We cannot escape from that. Means we are satisfied. Okay, we are satisfied the product or we are satisfied with the service asset. Is it right? They are giving so many different examples. Is that for each performance obligation satisfied over time, and entity should recognize revenue by measuring the progress. Is that by each if you are saying that yes, the performance is satisfied on stages, you are it's a simple example. Okay, a simple example. You are constructing an house. Is that you are constructing a house? What will happen? How much is completed? That much you will pay. Is that how much is completed? You will pay. Performance obligation, satisfaction level. If the performance obligation is completed, you will pay 100%. Is it? Now, what they are saying? Yes, tell me please.
That's all right.
Okay, there are two methods are there. Okay, one is measuring progress. One is output method, one is input method. How much? Output method is this one, 10%, 20%, 30%, 10, 20, it how much, 20%, 50, 80, and the balance 20%. Input method means how much you are incurring the cost. Is that output method is how much it is performance has been obligated. Input method is how much you are incurring the cost as a proportion of total cost. If you are saying I have invested 10%, they will pay you 10%. If you have invested 20%, proportionately they will give. A simple words, output on the performance, input on the cost. A contract is recognized incremental cost, is that a contract should be recognized for the incremental cost. Updating contract with the customer, it expects cost to those costs. Okay. For the purpose of FR exam, any cost incurred to fulfill a contract with the customer should be expensed. Is that if they give like this, is that if they give like this, definitely they will test you. Why I am reading each and every line? I know my experience says if I don't read one line, we will come across question on that line only. Okay, what is the revenue recognition if the contract with the customer, for a contract with the customer, when revenue is recognized over time? Three important rules. If there is outcome is a profit, if you are expecting that there will be a profit. If the outcome will be a loss, maybe you will get profit or loss. And in some cases, if the expected outcome or progress is unknown, often due to it being very early stages of contract. In the very early stages of contract, you don't know. Is it right? Then those are the rules we have to follow. If it is profit, it should be recognized according to the progress. How much is the percentage of completion? Profit you have to take. If it is a loss, it should be according to, again, the progress of contract. Sometimes what will happen, initially you will have loss, initially the contract will have loss, then subsequently you will have profits. Subsequently you will have profits. Fine. If the expected outcome is now unknown, then you have to, revenue should be recognized, level of recoverable cost. I'm underlining means keep it in mind. We are going to refer this back again as needed. Contract cost should be recognized as an expense in the period which has been incurred. Just I will go through it, okay, little bit very fast, okay, little bit fast, okay. I'm telling you, I'll tell you in advance that I will go little bit fast on that. Is that contract revenue comprised of what is the revenue, what is the work in contract work and claims. Is it right that the probable that they will result, there should be some revenue, it will come, okay. Incentive payments, if you are performing before date, if you are performing as per the any specific performance oriented conditions, then they will have some incentive payments they will give within time, okay, within time. What is the contract cost is reduced by the amount of any penalties. If there is any penalties, definitely the contract cost will be reduced. If you are not completing on time, is that if you are not completing on time, there will be fines will be there. Is that it cost will be related directly to contract, it is attributed to activity. Such costs are specifically chargeable to the customer under the terms of contract. Costs that are related directly to the specific contract, labor cost, material, depreciation, is that hiring the plant, claims from any third parties, anything for rectification or guarantees. Anything related to the contract, we have to deduct that price, okay. We have to deduct that price. That's what it says. You are talking about insurance, any designing, technical assistance, construction of any cost is there, you have to add it. Okay, the following information relates to the things. Can I skip this one? Is it right?
Okay, that's
You have
yeah.
1 minute. No. What is the contract price? Cost to date, estimated cost to complete, estimated stage of completion. No, you cannot do that. What amount of revenue, cost and profit should be recognized in profit and loss? No, it is a rule question. Okay, we cannot skip rule questions. Is that what is the contract price? Contract price is how much? See what they say. What amount should be recognized for revenue, cost and profit? Is that how much is the completion? They say completion is 60%. Is that revenue is how much you have completed, that much revenue you have to take, 60%. Is that what is the cost to date? They have given cost to date. How much is the cost to date? 320. Is that revenue to the current completion 480, cost to date is 320. How much is the profit? Means how much you have completed, that much profit you can claim. Very simple. How much you have completed, and for that completion what is the cost? Reduce the cost and take the profit. Okay, subject to completion. Is it? Take the same contract, but now assume that the business is not able to reliably estimate the outcome of the contract. It is believed that the all cost incurred will be recoverable from the customer. How much is there? Total cost is revenue is how much? How much you have incurred cost, that much is your revenue. Okay. How much in the same case? How much you have incurred cost, that much is your cost you have incurred is 320. Is it right? And it is equal to same as cost. And what is the cost? It is 320 only. Means
320.
if you are
Right.
taking the things from a, take the same contract, assume that business is not able, we are not reliably estimate the outcome, then we cannot claim more amount than what we actually spend the amount. How you have to present in the financial position, in the balance sheet, statement of financial position. You have to put contract price less cost to date, less cost to complete. Okay, keep it in mind. We will do whenever it is needed. Okay, this is the step 1. Okay, step 1, calculate overall profit or loss. Okay, second one, we are calculating the progress of the contract. In the progress of the contract, either we'll take input methods or we'll take output methods. And the third one is how it is going to be shown in the profit and loss. The same format we will use. Okay, the same format we will use. In the fourth stage, what we are doing, see again I am repeat. First, what we are doing, the step one is we calculate the overall profit. Step 2 is we calculate the progress. Step 3 is profit and loss account, and step 4 is balance sheet. Okay, we will do this. Okay, we will do this now. Can we do this?
Yeah.
Okay. Read the question. They have entered a contract with the customer. These are 4 steps, okay? Step 1, step 2, step 3, step 4. That's all. You have Mark Baker entered a contract with the customer to construct building for 2 million plus a bonus of 0.4 if the building is completed on 18 months. Is it? Divide the sentence. Estimate cost to construct the building is 1.5 if the contract is terminated by the customer. Estimate cost to construct the building. If the contract is terminated by the customer, Baker can demand payment of cost to date plus 30% if it is going to be terminated. On 1st January, as a result of factors outside his control, Baker was not sure whether bonus will be achieved. Is it because of some conditions they are not sure that we can complete it on time or not. At 31st December, Baker incurred cost 1 million. Still unsure that the bonus target will be made. Baker measures progress of completion based on cost incurred. Is it? On 31st December, they have received 1 million from the customer. What is the price? What is the price of the contract? The price of the contract is 2 million. Okay.
2 million.
What is the cost to date?
1.5.
At 31st December, Baker incurred cost. How much they have incurred cost? 1 million.
1 million.
Okay, they have incurred cost how much? 1 million.
1 million.
And still unsure. Is that total cost is how much? Total cost is 1.5. Till now they have incurred 1 million and still how much they have to spend? 0.5.
5. Yeah.
Is it? They are still they have to invest fund. What is the step 1 says? Step 1 says that contract price. Is it? Contract price is how much? Contract price is 2 million. Is it right?
Yeah.
Contract price is 2 million. Cost to date is how much? Cost to date is 1 million. Is it right? Cost to date is here only we will write, okay? Don't worry about it. Here only. Is it? Cost to date is 1 million. Cost to complete. Total cost is how much? Total cost is
2 million.
no. Total cost is 1.5 million.
One.
Okay. Cost to date is how much? Cost to date is 1 million. Means till how much you have to invest? Cost to
5.
complete is
Point
how
five.
much? Cost to complete is cost to complete is 0.5. How much is the profit? How much is the profit? 500,000. Is it clear?
Yes, doctor.
Is it clear? Sumaya, it is clear? Shall I write here or that is enough?
Better to write, doctor.
Is it? Yes.
It will
Step,
be, yeah, it will be clear.
step 1. Okay. Step 1. Is it overall contract? Overall contract. What they say in step 1? They say that overall profit or loss. Okay. Overall contract, profit or loss. Fine. What is the contract price? Contract price is 2 million. Okay.
2 million.
Minus cost to date is how much? Cost to date is 1 million. Cost to complete is how much?
0.5.
Cost to complete is how much? 0.5. 0.5 million. Isn't it? This is called as overall profit. Okay? Is it clear?
Yes.
Step 2. Okay? What is step 2? Slowly do it. Okay? Don't understand and do. Based on inputs, what they are saying, they have mentioned anything in the question? They are still in anything is there? they say based on cost incurred. Is it based on cost incurred? Baker measures progress. Is it Baker measure progress completion based on the cost incurred? If it is cost incurred, it is input or output?
Input.
Check. Cost incurred. If it is cost incurred, it is, if it is performance based, it is output. If it is cost based, it is inputs. Okay. If it is performance based, fine. If it is performance based, it is the output method. If it is based on inputs, it is the cost method. Fine. Now what you have to do? We have to know the progress. How we can calculate progress? Cost to date divided by total cost to complete. Cost to
This is
date.
step
Yes.
3.
Step 2.
Step 2.
Here I have written step 2.
Yeah.
Is it? Step 2 is related to what? Progress. Total cost to complete, cost to date is how much? Cost to date is 1 million. Total cost to date is how much? 1.5. How much you will get?
$66.66.
66.66. Okay, very important, very important. Section B. Now I am saying this. The moment I am telling you day by day, you are adding 2 to 3 marks minimum to your final examination. Okay, minimum 2 to 3 marks everywhere. Statement 3, profit and loss account. How much is the revenue? What is the steps? First follow the steps. Okay.
Yeah.
What is the revenue? Total price into progress. Okay, what is the total price?
2 million.
2 million. Is it? Revenue. Write very clearly. Revenue. Is right? Total price times completion. Is it? Total price is 2 million. Completion is how much? 66.7. You can put 60, 2/3 of the, you can put. How much you will get? 2000 times 66.66. How much?
1333.2.
Huh?
1333.2.
They forget about point. Okay. Now,
Okay.
cost to date. Okay. What they have mentioned? Go by the things. Okay. Go by the things. What is the cost of sales? Cost to date. Okay. See the thing. Cost of sales or cost to date.
Cost to date. 1 million.
1 million. 1.33. Okay. It is 1.33. million. Okay. Cost to date or cost of sales. Is it cost of sales? How much? 1 million. Is it 1 million? Anything else? No, it is profit. How much is the profit? 0.333. Okay?
1 minute, doctor.
No problem. Take your time.
All right, okay.
Sometimes I will ask you to join, okay? Monday, uh, somewhere 9 o'clock. If your convenience, no family commitments, nothing is there for all three people. If I'm just proposing this, there is no precondition. I'm just proposing this. Understand, Mazin, Sumaya and Hussein also proposing this. If Monday 9 o'clock, if you are free after Isha prayers, you can join.
There is another class for FR?
For me?
Another group, I mean?
No, same group.
Same group, okay.
I am not. See, I will not take it now. I will not take now anyone. There is lot of demand. People are there after results. There is lot of demand. I said that I
Yeah.
cannot. You see me now. You are seeing. I will take additional classes, but I will not speed up the process.
All right.
Okay, I will not take that risk headache. Okay, because see, those people will not pass margin. You cannot imagine. Is it?
Yeah.
They will come for 10 days, 20 days. They cannot. See, you should understand the concept. Then foundation has to be there. Very simple.
Yes, doctor.
Okay.
Yeah.
Step 4. I have very bad experience. You cannot imagine. Statement of financial position. The most important thing is there should be a good understanding between students and me. That's very important. And this course is not a course of 10 days, 20 days, like a burger or something like that. It is a Shiva. You have to place it. Understand why? It is not a burger. You should have patience, okay? Then only. Now, what is the statement of financial position? What is the statement of financial position? What is there? Check. In statement of financial position, revenue recognized to date. Is that revenue recognized to date less amount invoiced to date? How much we have revenue recognized to date? Is it right?
0.
How much
The
you have
profit
recognized?
one?
Huh?
The profit one we have.
No. Revenue.
Ah.
Revenue recognized. Revenue recognized to date. How much you have? Here we have revenue recognized to date. Okay. It is there here. How much is there? 1.33 million. Okay. Next. Less cost. Invoice to date. Is it right? Less invoice to date. How much is there? How much we have invoiced? Cost to date 1 million. Okay. Cost to date is how much? 0.3. What is this? Check. It is called as a contract asset or
Liability.
Is it right? We have, if it is minus, it is a liability. If it is plus, it is a asset. Is it clear? Take your time, understand once. I am putting all step 1, step 2, step 3, step 4 on the screen. Just go from the stages wise. Is it okay?
Yes, doctor.
Can we do another one
All right.
or not?
It's okay, doctor. One more.
So only one
May
more.
it's all right?
Sumaya.
Okay.
Yeah. Okay, doctor. We'll do one
Okay,
more.
same one. Nothing is there. Okay, same one.
Yeah.
Same steps. Okay. They entered a contract with the customer, construction of specialized building 10 million. Castle is not able to use building themselves at any point during the construction. Cost incurred is how much? 6 million. Cost to complete 6 million. Is it? Castle measures progress towards based on the cost input method. December 31st, they received how much? 3 million from the customer. Is it right? 3 million from the customer. Step 1. Is it right? Step 1. Overall profit or loss. What is the contract price?
10 million.
10 million. Is it? 10 million. Is it right? 10 million. Next, minus cost to date. How much cost to date?
6 million.
6 million. Cost to complete?
6 million.
Cost to complete 6 million. You have a loss. Okay? Is it okay?
Yes.
Don't worry about that. Don't get panic that we got loss. It is right or wrong. Never ever get minus values. You have to is it right? In examination also you get minus values. Don't worry. Follow the steps. That's very important. Okay? Follow the steps is very. Now what it says, if there is a loss, you have to provide for the loss. Okay? You have to provide for the loss. Okay? As contract, it is loss making. Is that? If there is a loss, next time whenever you are getting profit, is it right? Contract is in loss. Okay? This loss should be recovered immediately. I will tell you like this. You are doing business. Is that you are doing business? Loss will come. Next profit will come. Immediately you recover the loss. Okay? Immediately you will recover the got my word? Immediately you will recover the loss as such. Okay? Are you clear about this?
Yes.
Second point. Step 2. Progress.
Cost to date.
cost to date,
Total cost to complete.
is it? Total cost to complete. How much is there? Cost to date is
6
how much?
million.
6 million.
6 million.
Is it? 6 million. 6 million. And total cost to complete is how much?
6 million.
No.
Yeah, 6 million, 6 million. 12.
12 million.
Ah, yes, total. Okay.
Total cost to complete, how much?
Yeah.
12 million. Progress is how much? 50%. Is it clear?
Yes.
Yes, Sumaya, is it okay?
Yes.
Next. I am missing Hussein and Salim, whatever you say. We have created
Yeah.
such a good bond. You cannot imagine. You cannot imagine. We created such a loss is really, I am really, whatever you say, I'm very much emotional. I got so attached. The way you people showed interest, amazing, exceptionally well.
Yeah, we also, doctor.
Is
We
it right?
missed Salam.
One day we will meet, inshallah. Same point. Last time we met now, we met in the same place and we'll invite him.
Inshallah.
I will not let him go. Don't worry about that.
Inshallah.
Inshallah. Is that
Profit and loss.
this is the peak time, okay? This is the time you should not lose momentum. This is the time with nerves of steel, okay? You should show your strength here. Very important. This is the way you say now, tawakkal Allah, you'll say like that. This is the point we have to believe in Allah. That's all.
Inshallah.
We have to believe in Allah. This is the way things will work for us. Statement of profit or loss. Okay. Revenue is nothing but what? Total price. What is the formula? Follow the formulas. Okay. Total price
Tell
into
me.
completion.
Yeah.
Total price
Yeah.
into completion. How much is the total price? Total price is how much? 10 million
10 million.
times 50%. 5 million. Is that? Now, what happens? First, you have to recover loss. Okay, cost of sales is nothing but cost to date. Is that cost to date? How much is cost to date? Cost to date is how much? 6 million.
6 million.
Is that cost to date is 6 million. Whatever happened, you have to recover loss first. Okay, loss is how much?
2 million.
No, 1 million. That is overall loss.
Okay, okay.
Okay, overall loss is 2 million. Listen carefully. I didn't.
Mm.
Is that overall loss times percentage of progress. Overall loss is how much? 2 million. Is it right?
Yes.
But we will not take overall loss. How much we have completed? 50%. Progress is
Yes.
how much? 50%. How
Yes,
much will
yes.
recover loss? Now, what is the loss? Again, I am saying, repeating this. This is little bit critical, little bit important. Is it? You have the revenue is total price into completion. You have cost of sales is how much? Cost to date is 6 million. And you have a loss. We will not take overall loss, okay? We'll take only the percentage of loss. If you have completed 66%, we'll take 66% of loss. If you have completed 40%, we'll progress 40% of loss. Is that? Now, how much loss we will show in the profit and loss account? We are going to show profit and loss account 2 million loss to the date, okay? Loss to date. We could not write that, but it is loss to date. Are you clear about this?
Yes, doctor.
Last one. Step 4. What is the rule in step 4?
Revenue recognize.
Revenue to date.
As to date, yes.
How much? 5 million. How much we have invoiced? How much we received?
Cost to date, no? Less.
How much we received? Cash. Cash will receive 3 million from the customer. How much you have received?
3 million.
3 million.
3 million, yes. That's true.
In simple words, they say it is a contract asset, okay? But in other words, it is a receivables. Okay? We say it is a contract asset. We will not write receivables. We have revenue, we have 5 million revenue, but how much we have received? We have received only 3 million. Still we have to receive how much? Still we have to receive 2 million.
2 million.
Okay, still we have to receive 2 million. Anything else? Anything is there?
No.
See how it is no. See how much is the loss? Overall loss is how much? Loss is 2 million. Is it right?
2 million.
Loss is 2 million. Is it right? Loss is 2 million. Fine. I am putting it. See the things. You have got how much loss? I will write here. Loss is how much? 2 million. Is that? This is 2 million loss. Now, project loss till the date how much is there? Till the date loss is how much? Till the date loss is 1 million. Is it? Till date. Now, you have a difference. Is it right? That how much you have the loss? You have to recover this loss. How much you have to recover this loss? There is a loss. Okay, there is a loss. Contract is not complete. There is still 2 million loss is there. 1 million is to the completion. 1 million is still it has to be recovered. Still the contract is not completed. Is it? Contract is not completed. The moment the contract will complete, definitely what is the rule? Immediately you have to recover the loss. Is it? Immediately you have to recover the loss. Immediately means I am putting very clearly. Is that this rule you should remember. Immediately means next 12 months. Is that immediately means next 12 months. Is that? Now, if you are saying next 12 months, recovery means it is going to be where it is going to be current liabilities.
Liability.
Next, remember this. This is the golden rule which is very much in demand nowadays. Difference between current assets, current liabilities, non-current assets and non-current liabilities. If you are clear in this, you are perfect everywhere. I'm telling to all my students, any IFRS bulletin, any IFRS news, latest news you refer, somewhere they will mention this only. Okay? Is that what you have to write? Provision for losses. How much? 2 million minus 1 million. It comes to how much? 1.
This provision has to be passed in the same year, right?
It is in the same year.
Yeah, but for
It is right? It is same year for the loss. It is
yeah,
for the same year for the loss. Provision is a liability. Is that general entry? I am writing
yeah,
this. Is that? Now I will tell you one thing. When you are doing the examination, is that first immediately write the entries. If you don't write the entries, marks will be lost. When you are revising before submission, don't submit. Is it right? You will. I will tell you next time how the examination, how you have to follow it. Is that everything will be specific? Fine. You have the credit. It is a liability. Is it liability? When the liability increases, you have to credit it. Liability increases, credit. Liability is decreasing, it is debit. Asset increases, debit. Asset is
correct.
decreasing, credit.
That's it.
Okay? And the debit will be cost of sales.